If you run a company with 50 employees or less and would like to save money on your group's health insurance, then listen to these two options that are taking headlines across the country. Option 1. Pre-funded. If your company prefers a group-style plan, no problem. We can help by offering a new group plan with a pre-funded approach. Some benefits of the pre-funded option include initial cost savings of 20 to 40% without sacrificing size or provider network. Great coverage starts right away and stays every month on premium. Employer has no risk of owing more if company does experience high claims. In fact, if your company's overall claims experience is good, at the end of the plan year, the company can be refunded as much as 40% of total premiums paid. A huge reward! Even if your company has high claims and a bad experience, you still incur no additional premiums or costs. Your company wins either way. Here's how the self-funded plan can help your company save. The employer has one predictable monthly payment. The payment is determined up front and guaranteed not to increase for a full year as long as there are no changes to the group's benefits or enrollment. It covers Claims Fund contribution. Claims Fund is owned by the employer and used to manage claim payments for the group. Plan administration, claim payments, accounting, customer service, etc. are all handled for the employer by a third-party plan administrator. Stop-loss insurance premium helps guard against larger than expected claims. Here's how stop-loss insurance benefits your company. Stop-loss insurance reimburses employer for unexpected claims. Aggregate stop-loss benefit. If the group's overall claims exceed the aggregate deductible, stop-loss insurance reimburses the employer for those claims, protecting the business's assets. Specific stop-loss benefit. If an individual group member's claims exceed pre-selected level called specific deductible, stop-loss insurance reimburses the employer for that member's claims. With the pre-funded option, employer may even receive a refund. The claims fund is owned by the employer. At the end of the plan year, if the group's claim expenses for the year are less than the aggregate deductible, the amount set aside in the claims fund, you get a refund. Each year, over 50% of employers get a refund. If this is not a viable option for your company, consider option number 2, Uncle Sam option. Replace your company's existing plan by putting employees into individual plans and redeem benefits for both the employer and employees. Individual plans are now equivalent in benefits to groups and may cost less. Subsidies for employees are available for individuals making up to $45,000 and families up to around $95,000. Some of the benefits are: individual plans are portable and stay with employees if they decide to switch jobs. Employees can choose the level of coverage they need, specific to their family's medical needs, deductible, co-pays, co-insurance, etc. Uncle Sam Subsidy replaces employer contributions for not only the employee, but the whole family. Employees normally save 50% on dependent costs. Typical plans range from $70 to $343 a month, total cost for entire family. Employer no longer has to worry about annual renewals or rate increases. Employer can use the saved benefit dollars on accident, dental, hospital recovery, and more for their employees. If the majority of your employees make between $12 and $29 per hour, this option will save you and your employees thousands. Be sure to ask how an optional defined contribution plan can provide employers a vehicle to provide pre-tax dollars to fund some of their employees' individual plans. Here are some example rates from other companies that have benefited from using the Uncle Sam option. The New York Times highlighted Zane benefits in an article. Zane Health is an online solution that allows employers to reimburse employees for individual health insurance costs tax-free. New York Times mentioned that many employers are finding that individual insurance can be 30 to 40% cheaper than comparable coverage in a small group plan. And for low-income employees who are eligible for government subsidies to help with the purchase, the savings to the company can be twice that. This is not a gimmick. You still get insurance from the same top carriers including Aetna, Assurant, Blue Cross, Cigna, and Humana. Let us show you a new way to save money and still have great health insurance. Get us your census and we'll find out exactly how much your business and employees can save. Mark Deschaines, the principal agent, has over 25 years of health insurance experience. He's been published in the Texas Dental Association Journal, has been guest host of several radio and TV shows on the topic of Obamacare, and currently insures well over 10,000 Texans and business owners. Trust him for your family's coverage.